Wall Street investors are fire selling homes at massive losses, like this one behind me here in Florida. The investor bought it 2 years ago. They're now selling it for a 25% loss. They're taking a $110,000 write-off on this house. And this is a trend that you guys have to pay attention to in the US housing market, because now that these Wall Street investors are selling and selling at a loss, that means that the market could go into a free fall, particularly in the areas where these investors bought up all the homes over the last 2 or 3 years. And in this case behind me, this is a house in Punta Gorda, Florida. The investor, they're called First Key Homes. They bought it in May 2022 for $440,000, and it's now listed for $330,000. They've cut the price, they can't rent it out, and clearly they're fire selling that house. And so now you have to ask yourself a question, everyone. What does that do to the property values in a neighborhood like this? The values of these houses could go into a complete collapse, much like they did back in the mid-2000s. Home prices in this zip code went down by 43%, according to data that you can find on Reventure app. And I think what's amazing is that so many people in the housing market thought that this wouldn't happen. I mean, I've been talking about this investor sell-off for the last 2 years. I've been predicting it since the middle of 2022. And so many people told me when I first predicted it that I was wrong. So many people said that the investors would keep buying homes forever and keep pushing home prices up, because that was what the mainstream narrative was. However, now very clearly that is no longer happening. Data from Redfin shows that investor purchases are down 60% from their pandemic peak and are at the lowest levels in nearly a decade. So we have the purchases of investors way down. Meanwhile, we now have many of these investors selling. And in the case of First Key Homes, they own around 48,000 properties, according to data from PropWire. So I went on propwire.com and I looked up this address, and the owner's First Key Homes, and you can see their entity owns 48,000 homes. So this is a massive Wall Street investor. And I actually looked into more and more of First Key Homes' portfolio, and I found more examples of houses they're selling. It's not just here in Punta Gorda in Florida, it's other parts of Florida, it's also in cities like Memphis, it's across Texas. First Key is liquidating many of their assets. And we can only speculate at this point why that's happening, why this Wall Street investor, who's the 5th or 6th largest homeowner in America, is selling so many of their properties at a loss. But it really causes you to think, like, how big could this crash get? If the big guys, if the big investors are now running out of money potentially and starting to sell, well, what about all the smaller investors? I mean, there's 27 million homes in America that are investor-owned homes, according to data from Atom Data Solutions. So that's a quarter of all homes in America are owned by investors. The majority of those homes are actually owned by smaller mom and pop investors. 50% of all investment properties are owned by people who only own 1 or 2 or 3, only own a handful. And then about 20 to 30% of investor homes are owned by people who have smaller portfolios of around 10 to 20 homes. And so the fact that the big investors are now selling suggests that the smaller investors are also probably going to start to have issues too, because the rising interest rates is really the problem here. It's the rising rates that are a problem for these investors, because it's impossible to make money on rental properties with interest rates where they are today. I mean, mortgage rate at 7% means that you literally cannot cash flow anything. You're going to be losing money. If you have debt on a investment property at 7%, you're going to be losing money after you pay your expenses and collect your rent. And so we have more and more of these investors losing money on their cash flow, and in many cases they can't even rent out these houses. That was the issue on the house over there I showed you in the beginning. You can see on Zillow, they bought it with the intention of renting it out, and they couldn't rent it out. They just had to keep cutting the rent, because this market here in Southwest Florida, it's in a downturn. Fewer people are moving in. The builders here went crazy, and the result is the inventory levels are absolutely spiking. And I'm going to show you guys this inventory graph. And I want you to be prepared for what you're about to see. Because if this is happening in your city or zip code to the inventory, you better watch out. Because it means that you're in a downturn, you're on the precipice of a crash, potentially. So in this zip code, we could see 3 years ago, there was 35 homes for sale in this zip code. Fast forward to today, there are around 300 homes for sale. The inventory has gone up 800 to 900% in 3 years. We are at the highest level of homes for sale that we have seen in at least a decade. And so when that happens, it means there's a big downward shift in the market. And what I would encourage you guys to do at the end of this video, go to www.reventure.app and search your city and zip code so you can see what the inventory trends are in your area. Because if the inventory in your area is doing what's happening here, you're gonna see more houses at discounts. You're gonna see more houses being sold off by investors at big losses. And what scares me about that investor sell-off, everyone, is that, yeah, there's 27 million investor-owned homes in America. And maybe vast majority of these investors actually aren't even struggling. Maybe a vast majority of these investors own it free and clear or have a good tenant and don't have issues. But if only, I don't know, 10% of investors have issues, that's around 3 million homes that could be sold off by investors. Current inventory on the US housing market's around 800,000. So investors own 10 times the current inventory levels on the market, and assuming that maybe just 10% of investors are in some type of distress, that would still be 3 to 4 times what's on the market currently. And so there's lots of room for just even a small number of these investors having issues to then cause a big downward shift in the market. And of course, this is happening in Florida pretty much more than anywhere else, because in Florida, the housing market here is super speculative. It gets lots of attention. During the boom times, everyone wants to pile in. All the Wall Street capital comes here. All the builders come here. And then when the downturn hits, this is what happens. When the downturn hits, the Wall Street capital gets pulled. So the Wall Street capital stops buying, and then they start selling. So that causes the market to go down. At the same time that the builders, you can see these new builds behind me. I actually just spoke to someone on the other street. He said that a lot of these houses here in this neighborhood are recently built. You can see some more over there. Well, then the builders, right when the investors stop buying, the builders then push all their permitted homes over the last 2 years. They push them onto the market. They complete them at the exact time that the investors stop buying. And that's how you get a massive inventory spike that causes prices to drop. All right, folks, I'm going to take you to a home building site right now here just down the road, because you need to see with your own eyes what's going on here in Florida. I kind of just gave you a little bit of a preview with the investors selling, with the home building in this area, but there's so much construction right now that was permitted over the last couple of years. You can see the permits in Florida went crazy, and now these builders are getting stuck with these homes. Some of them are halfway complete, and the builder just is choosing, in many cases, to stop construction. I mean, particularly in Florida, Texas, Arizona, Colorado, a lot of these pandemic boomtown states, the prices are going down. Very obvious if you just look at Zillow for even a little while. You can see the prices dropping. You can see the Zestimates collapsing. The Zestimate on the house I showed you guys was down 31% over the last 2 years. Zillow actually thinks the house is worth less than the Wall Street investor has it on the market for. And so one thing I actually think is really interesting, and you guys can let me know what you think about this. The fact that people now have real-time access to their home value, right? The fact that people now have real-time access to their home value through this estimate, that is new. That has never been the case in any previous housing cycle, that like an owner could just every day check the value of their house. Well, now people are checking the value of their house and they're seeing it go down. And we don't really have a historical precedent for what that would do to a housing market. I suspect we're going to see a lot of owners freak out over the next year or two, particularly like in a city like Austin, right, where the prices are down 20%. You have owners now getting a new reality about what their house is worth. They thought it was $500,000, now it's $370,000, and it's like, oh my goodness, I'm $130,000 poorer in terms of my net worth than I thought I was. I think that's something that could cause even more panic selling on the market in the future. And so that's something to think about. The Zestimate's going down. This is a new trend in the market, particularly here in Florida. This is happening right now. You guys can let me know what you're seeing for this estimate for your house or the houses in your neighborhood. Sometimes Zillow will actually remove this estimate when the prices get really volatile, because it's hard for them to kind of project the prices in certain neighborhoods when the volatility increases. And so that's one aspect of this housing downturn that I think is kind of unique. Don't be surprised if these estimates keep dropping and a lot of homeowners start panicking a little bit when they see that their house is not worth what they thought it was. But folks, I got to show you. This is what we're seeing more and more of here in the market in Florida. Again, we're in Punta Gorda. Punta Gorda is in southwest Florida. It's a little bit north of Fort Myers and Cape Coral, about an hour and a half south of Tampa. You can see clearly that this house has been abandoned. The builder started construction on it. It looks like 2 years ago. This house is actually listed on Zillow right now for $800,000. And it's been on the market for 640 days. And it's a ghost town. And just we're seeing more and more of this here on the market here in Florida. And this, of course, is a telltale sign of a housing bust, right? When you see the builders start to abandon the construction sites, you know that the downturn is in the offing. And what's interesting is that, the builders, they don't build everywhere. And I want to be very clear about this point, because I know there's a lot of people who watch my channel, who don't live in Florida or Texas or Arizona and some of these states. You might live in New York or Illinois or the Midwest or the Northeast. In many of these states, the builders aren't very active. And so you're not going to have as many of these situations of the builders stopping construction or the big increase in inventory from the new homes. And so in that way, this housing market is very bifurcated. And I want to make sure you all know that just because I say something about a certain area doesn't mean it's necessarily applicable to your area. You kind of have to go and do the research for yourself on Reventure app for your city and zip code, so you know what the trends are in prices, you know what the price forecasts are and where the market is heading. But one thing's for sure, here in Florida and in Texas and in Tennessee and in many parts of Georgia and North Carolina and Arizona and Utah, the builders went nuts the last 2 years. They pulled a huge amount of permits, and now we are seeing the natural consequence of that during the down cycle. Lots of homes under construction that were abandoned, other homes just sitting on the market for sale. And what's interesting is there's this perception among many people out there that the builders are healthy and that the builders are in good shape. But I'm skeptical of that, because the more I travel across America, the more I visit these home building communities, the more I see these big ominous warning signs. And what it feels like to me right now, everyone, is it feels like 07 kind of, or maybe late 06, early 07, where we have a spike in inventory starting to occur. We have prices dropping in a lot of different cities, but we have the broader market still kind of holding on. And we also still have this idea that the economy isn't in a recession among many people. They don't think the economy is in a recession or will be in one. Very similar to the time in early to mid 07, as far as what was going on. And it's amazing to me how history can repeat itself. I think the expression is, history doesn't repeat itself, but it rhymes. We are not going to see the same exact downturn play out that we saw in 08. We're not going to see as many mortgage defaults, for instance. We're not going to see as many foreclosures, but we're still going to see something pretty big happen. Because there was just so much speculation, the prices just went way too high, so much home building, so many investors buying left and right, so many Airbnb investors, right? When you have that, you just know that there's going to be a correction. And in this area here in Punta Gorda, prices are 25% overvalued. So you say to yourself, how much could prices crash? Well, if prices are 25% overvalued, that's a pretty good projection of what the potential downside could be, 25%. Now, prices could also go down by more than that, because in the last downturn here, prices dropped by 43%, according to data available on Reventure app. So important for you to know how overvalued prices are in your market, as well as how much they dropped in the last downturn. Because that will give you some key insight into the history of your market and the downside exposure that you face as a home buyer, investor, or even a seller. So I'm going to tell you folks, if you're a seller, you have your house listed now, or you're thinking about listing your house, you got to know what the trends are in your market. You got to know what the actual trends are. Because if you list wrong in a market like this, your house is going to be sitting on the market for a year, and you're going to have to cut the price by even more. So better to know going in what the direction of prices is and how much downside there is. And one thing I want to talk to you guys about too is just my perceptions from being here in Florida the last couple of weeks. I've been here for a week. I was in Tampa, Punta Gorda. I'm also staying in Miami actually right now. And I was also here a couple weeks ago in Orlando and Cape Coral. And my general perception is that a lot of the people here in Florida want to leave. I mean, I talked to lots of people here who are either struggling. I just talked to someone actually who lost their job about a year ago. They moved down to Miami for a job. They lost their job and now they're trying to figure it out. They're trying to make some money and they're living in a really expensive city. I meet people like that. I also meet people who've lived here for 25 years and are just had it with the heat and the cost of living. And so I wonder if Florida could be on the precipice of a protracted housing downturn that lasts multiple years. And I know that's something that a lot of you don't want to acknowledge or think about, because I think a lot of us, particularly people who are investors or sellers, or a lot of people want to think this will be a quick downturn, quick correction, Fed will lower interest rates and everything will be good. But it's just not what I'm seeing on the ground. What I'm seeing on the ground is a tremendously overvalued housing market where the investors are now bailing and where the builders still have this huge pipeline of permits they're finishing, and where a lot of the locals now are priced out and leaving. That doesn't leave me with a good feeling about where the market's heading the next couple of years. And I'm not saying that to be overly bearish, everyone. I'm just saying it to be realistic. There's very few people who report on the housing market will give you the straight truth. A lot of people don't want to admit that Florida is in a downturn. A lot of people don't want to admit that Texas is in a downturn, because those are the two big states for home buyers and investors. And many people in the housing market who make money off the housing market and providing services, they cater to people who buy in those states. So they don't want to admit what's actually going on. What I try to do for you guys out there is provide the objective truth, because there's just so few places you can get it on the US real estate market right now. And I strive to do that as much as I can. And it all comes down to inventory, price cuts, and how overvalued home prices are. Knowing those three data points, you can really understand your market quite well if you're a buyer and investor. And so what I encourage you all to do is go to Reventure app, especially if you appreciate this content and these on the ground videos and you want to learn more about your housing market. Go to Reventure app if you haven't already. Sign up for a premium account. The cost is $39 a month, where you can gain access to all the housing market information for your area so you can make a more informed decision.